Ramesh Venkataraman, who's a senior partner and head of private equity at Samena Capital. Remember, Samena manages close to $800 million. Mr. Venkataraman, many thanks for taking time out for us. Want to begin by talking to you about how you're gauging the current mood. Would you say that, there is an improvement in the investing environment, given that the economy is on the mend, we've got a stable government at the center?
Look, I think we've been strong supporters and investors in India over the last 6 years. So our commitment to India hasn't really changed. But I would say two major developments. One, at the macro level, clearly the investing environment has improved thanks to the new government, the positive sentiment around the macroeconomic environment. We're seeing a lot of our investors start to look at India very positively, and that's very good for us. So that's at the macro level, and we hope that'll continue, and some of the reforms that have been announced, the government follows through and continues to implement them. But also importantly, at the micro level, India has become a far better investing environment for the simple reason that it's a much more mature market than it was, say, 7-8 years ago. Indian promoters, entrepreneurs, business groups have all understood the value of private equity and have learned how to work with private equity firms such as ours. So we're seeing much better transaction structures, much more attention to corporate governance, and some of the key rights and areas that private equity is concerned about, such as exit, entrepreneurs and promoters are beginning to acknowledge and build into the transaction. So both at the macro level and the micro level, India has become a far more interesting market now than it was, say, 2 or 3 years ago.
Ramesh, which are the sectors which you are studying more closely as a private equity player, which look attractive to you, and where do you actually see earnings potential much higher than the rest?
Look, we're sector agnostic, and I think that we look across sectors. But at this point in the cycle, I think especially the industrial sector and some of the domestically oriented manufacturing sectors are starting to look very interesting. We made an investment earlier this year in the two-wheeler market in India. We invested alongside Mahindra in their two-wheeler business. And for instance, we're starting to see the benefits of improving consumer sentiment, potentially a lower interest rate environment going into next year, and the reduction in oil prices, all having a very positive effect on consumer demand. So we think some of the out of favor sectors, particularly manufacturing, has been through a tough time over the last 2 or 3 years, could make a comeback. We've invested considerably in services. One area that we've invested in Southeast Asia is logistics, but we're starting to see a lot of interest in our offerings in Southeast Asia to be brought into India. As you know, e-commerce development in India has been constrained by the lack of strong logistics infrastructure. So logistics, we think, is a prime area, and there's a lot of interest in that sector. So, but again, we're sector agnostic, and we don't come to our investments with a top-down view on which sector is attractive versus which one is not. We look bottom-up at individual opportunities and look to partner with high-quality business groups, high-quality promoters and entrepreneurs, and ultimately look for good companies and good management teams.
Ramesh, tell us, how are you viewing the valuations? Because in the market, do you think valuations are starting to become a little bit of issue because primary markets are all hot and excited, which is making transactions difficult for players like you?
Absolutely. Look, I think one of the challenges in India has always been that the public markets set the tone for private equity, and private equity transactions are benchmarked to public markets. Unlike in the rest of the world, where private equity typically operates at a discount to public markets. So the fact that the public markets have run up since last September is a challenge for private equity valuations. Valuations have come back very, very strongly, and it may be something that gives thoughtful investors, disciplined investors like us, some concern. All the same, as I said, the investing environment has also matured. So some promoters, some of the better promoters, the better business groups are also recognizing that they have to leave money on the table if they want a private equity investor to come in. And to that extent, not everyone is taking their lead from the public market valuations. But overall, you're right. The run-up in the capital markets has made transacting a little bit more difficult in this period.
Mm-hmm. How is foreign capital looking at India right now, compared to, say, the last couple of years? What's the kind of feedback that you're getting from some of your own large investors?
Oh, absolutely. Absolutely. Look, India has come back very strongly. As I said, if you said 2 years ago, it was almost difficult to explain a deal in India to our investor base. India was so out of favor. The currency had depreciated strongly. The macro environment, there were lots of mixed signals around tax issues and the way foreign investors had been treated, and a number of micro issues. The newspapers were full of the wrong sorts of stories regarding India. Over the last year, the macro environment has certainly improved. We have a new government which has said all the right things as far as the investing and business environment is concerned. We're still waiting and watching for some of those reforms to come through, but certainly the news flow is very positive. And as far as the macro stability with the new Reserve Bank governor and the policies that he's adopted, certainly inflation appears to be coming back under control. The currency appears to be reasonably stable. And the fact that oil prices have dropped is a very, very good macro positive for India. So overall, India has certainly come back strongly in favor, even as countries like China experience a slowdown and questions are starting to be raised about the long-term sustainability of the growth rates in China. Indonesia has fallen out of favor after having been a real darling of foreign investors for 2 or 3 years. So in that sense, in the region, certainly India has made a strong comeback. Amongst the emerging markets, I would say it's one of the more interesting markets today.
Let's talk about your India portfolio, that includes companies like Built, Voltam Transformers, Dynamatic, amongst many others. So clearly, these are mid-cap companies that seem to have found favor with you folks at Samena Capital. Is this a space that looks particularly attractive even now?
Look, as I said, we don't come at it from a top-down view of sector or size. We look for good companies. I mean, Dynamatics is a very, very good example where we've been long-standing investors. We were an investor in our first fund, which is a pipe fund, back in 2009, and we took a position in our private equity fund in 2011. We're very pleased with the performance of Dynamatics, but only a year ago, a number of investors would have looked at us and asked questions about that investment, but we fundamentally believed in the management. We believed in the promoter. We felt that they had the right strategy. They were building out in a segment that's a very difficult segment, aerospace, that a number of big Indian groups have been trying to build business in for the last decade and not succeeded. But we knew that they had a set of capabilities that was unique. And that's all started to come through in the last year, and the stock markets have woken up. So we are less about looking at mid-cap or top-down themes, although those are important. We're fundamentally about identifying good companies with good management teams, and in the case of Dynamatic is a terrific story that today has attracted the attention of a number of other leading investors.
Find us on Facebook at facebook.com/ETNow, and don't forget to click the like button. You can also follow us on Twitter at ETNowLive. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/user/ETNow.